Hello everyone. Today we are going to understand a very important concept in microfinance. How remittances, savings and insurance are connected to create a complete financial ecosystem for low-income households. This integrated model is transforming the way financial inclusion works, especially in developing countries. By the end of this video, you will clearly understand how this system works, step by step, and why it is so powerful. The financial reality. Let's begin with the financial reality of low income households. Many families have irregular and unpredictable income. Farmers earn after harvest, daily wage workers earn only when work is available, and small shop owners face seasonal income. Secondly, most families do not have a financial safety net. One illness, accident, or crop failure can destroy their finances. And third, access to traditional banking is limited due to documentation requirements, minimum balance rules, and distance from bank branches. Even when they receive remittances from family members working in the cities or abroad, this money is often spent immediately without savings or protection. So, what do they do in this case? What is the integrated financial model which is put up here to improve their situation in certain situations? Microfinance institutions identified this gap and created an integrated solution. Instead of offering separate services, they combine three key financial tools: remittances, savings, and insurance. When these services work together, they form a complete financial ecosystem that helps families move from survival to financial stability. Let's move towards the first step, that is remittances as an entry point. The journey begins with remittances. Millions of migrant workers sent money home regularly. Early, this money was received in cash through informal channels, which meant no record, no saving habit, and no link to formal finance. MFIs changed this by depositing remittances directly into the savings account. This simple step brings families into the formal financial ecosystem and becomes the starting point of financial inclusion. Next is the step 2, that is building savings habit. Once remittances start coming into a savings account, something powerful happens. Families begin to see their money accumulate. They start thinking about emergencies, education, and future needs. Savings account offer safe storage, encourage discipline, and reduce dependence on loans. Over time, savings become a habit rather than a one-time activity. Step 3, savings to insurance. But savings alone aren't enough, right? One major emergency can wipe out your years of savings. This is where insurance comes into play. MFIs allow customers to pay small insurance premiums directly from their savings account. Premiums can be paid monthly and automatically, making insurance affordable and accessible. This removes the biggest barrier to insurance, the need to pay large lump sum premiums. Next, we'll understand some types of micro insurance. MFIs typically offer simple and affordable insurance products, such as health insurance to cover medical emergencies, life insurance to protect family if the earning member dies, crop and livestock insurance for farmers, and asset insurance for small businesses. These products protect families from financial shocks. Now we'll try to understand this integrated ecosystem flow in one slide. Now let's connect everything together. Money is received through remittances. A portion is saved. A part of the savings pays for your premiums for the insurance, and the family becomes financially protected. That's how powerful the system is. This is the power of integration the system defines. Let us now get to know why is this model so important and how this model works. This model works because it solves multiple problems at once. It promotes financial inclusion, encourages savings habit, provides protection against risk, and helps families avoid falling back into poverty, which is very, very important. It also builds long-term trust between customers and microfinance institutions because this trust is very important for this model to sustain. Now let's understand the real life impact. Let's take a simple example. Suppose a migrant worker sends money home every month. Earlier, the family spent everything. Now, with this model, part of the money is spent, part is saved, and small portion used for insurance. Over time, the family builds savings and gains protection against unexpected events. This leads to long-term financial stability. So, I would like to conclude this video with this conclusion. We learned today how microfinance institutions are connecting remittances, savings and insurance to create a complete financial ecosystem. This model helps families receive income, save money, protect money, and ultimately grow financially. And this is why integrated microfinance is the future of financial inclusion. Thank you so much for watching.